This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, March 29th, 2016. Euro dollar. So a lot of chop in the euro right now, and it's unclear with directional bias. At this point, we need to focus on the yearly high at 113.77 further up, and the recent low that we saw at 110.58 from the other week. A break above or below will be required for clear directional insight, while anything in between is classified as some choppy consolidation. Cable. So cable continues to trade with a bearish tone, with the market consolidating off recent lows, though the market continues to be very well capped into rallies and could be poised for fresh downside. A break below 140.53 would do a good job of accelerating declines back towards the 7-year low at 38.36, while a break back above 146.68 would ultimately be required to take the immediate pressure off the downside and force a shift in the structure. Dollar yen. So dollar yen has done a good job of seeing some recovery out from recent multi-month lows at 110.67, though ultimately while the market holds below some multi-day range highs at 114.87, really while it holds below the psychological barrier at 115, the overall pressure does remain on the downside, and there is risk for another topside failure and bearish resumption. A clear break and close below 110.67 would open the door for the next major downside extension in this market towards the 107 to 108 area. Euro Swiss. So Euro Swiss continues to chop around and the market remains confined to a multi-week, multi-month consolidation. But overall, the broader recovery structure remains intact and any setback should be very well supported towards the 108 area in favor of the next higher low and fresh upside extension beyond the recent multi-month high at 112 and towards 115 further up. Only back below 107.15 would compromise this constructive outlook. Aussie dollar. So Aussie has seen some rallies stall out in 76.81 by that recent 2016 high, but while the market holds above that previous resistance, now turns support at 73.85, the pressure does remain on the top side, and there is still risk for a break above 76.81 and towards next key medium-term resistance at 78.49 further up. At this point, it's going to take a break back below 73.85 to put the pressure back on the downside. Dollar CAD. So dollar CAD has shown some decent recovery in recent trade after stalling just shy of the critical October base from 2015 at 128.32. But at this point, the market will need to establish back above 134.06 to take the immediate pressure off the downside and confirm the possibility for a medium-term higher low and fresh upside extension, potentially all the way back towards that January near 13-year high at 146.90. Kiwi dollar. So Kiwi has done a good job of consolidating recent trade, but ultimately this market remains very, very well capped on rallies up towards 6,900, which offers itself as formidable medium-term resistance. At this point, rallies should continue to be very well capped towards that level ahead of the next downside extension. Initial critical support comes in at 65.46, below which exposes the 2016 low at 63.47 further down. SPX 500. So the S&P 500 is consolidating a recent round of setbacks after stalling out just over 2050. At this point, an ideal lower top is sought out somewhere around current levels ahead of the next major downside extension back towards the recent multi-month low at 1808. A break below 2000 will do a good job of confirming or strengthening this outlook and accelerating declines, while only a weekly close back above 2050 would compromise the newly adopted bearish outlook for the S&P 500. Gold. So despite a recent round of setbacks in gold, the market is expected to be very well supported on dips towards the 1190 to 1200 area by that previous resistance now turned support. At this point, it would take a break back below 1190 on a weekly close basis to put the pressure back on the downside. But until then, the pressure remains and the odds remain for some form of a higher low ahead of the next major upside extension beyond the recent 2016 peak around 1283.50 and towards the 2015 high from January of 2015 at 1307 further up.